Hey traders, welcome back to another analysis video taking a look at the markets and the week ahead. Very interesting start here. We have gold breaking out of what was a key level of resistance around the 2070 level. This candle here printing as we're speaking. I am a little bit surprised that we're getting this movement here. We actually, you may be wondering what's going on with gold right now. Well, it seems like the dollar is just slipping further and further down. And a good reason for that is, of course, what we like to talk about regularly on the streams and videos is yields going lower here. And you know, I want to beckon a question here for traders to think about. Yields falling is a good thing, right? In the sense that interest rates going down are going to help companies and businesses and the consumer to stay strong, and that could be a bullish thing for, you know, stocks, for gold, etc. But let's be careful here that we get what we're wishing for too much, right? Be careful what you wish for, right? Because if this market keeps going down, if you see yields on the 10-year, for example, slip much lower than where they currently are, like if they start getting down into the mid threes, it starts to ask the question, is the economy very, very meaningfully slowing? And it definitely brings into a new question going into the new year. How low do we really want these interest rates to go? Anyways, gold is moving higher here. You can see from the price action that it is a very sturdy uptrend here. And if we take a look specifically at the 4-hour chart, you can see I've got some zones marked up. We've been able to consistently break through market structure. We pull back, we find buyers. And that seems to be the narrative right now in the markets, is that pullbacks in gold are being bought and pullbacks in the dollar are being sold. Here's a look at the dollar index on the 4-hour chart. We could go ahead and draw a very clear downward trend here on this chart. And what you can see is, again, the dollar index just seems to be printing fresh lows down to 101. And if you've been watching along, you know that the overall idea for me is a move back down to 100, which is, you know, becoming closer and closer to a reality. My idea basically being that, you know, we put in this low, we've rallied really strong, and that I think that we're going to completely erase that move, you know, which has been the theme in a lot of ways between 2022 and 2023. 22 was a very terrible year for risk assets. The dollar was super strong. It was like the one thing that was killing it in the markets. Everything else was down. And then the opposite happened. We've kind of started to see what many would call an everything rally. We're seeing the stock market rally. We're seeing, and that includes both broad stocks as well as the NASDAQ, right? The big seven, things like Apple, Amazon, Netflix, or not really Netflix anymore. Nvidia is what I meant to say. You also have the Dow doing incredibly well. You have gold and silver seeing some nice gains. And even the oil market is making a push back higher. It seems like the dollar is taking the fall, if you will, for a lot of other things to do well right now. And I think that that is very, very interesting as we go into the end of this year and the start of next year to see if we're going to get a continuation of that idea. But again, the big story today, gold is really pushing strong, and I want to dive into some stuff here with you guys and see what we can get. Now, first of all, you guys know we like to keep an eye on the COT data, and I find this to be very interesting. Look at this, guys. Check this out with me. If we take a look at the dollar index here, dollar index saw a huge amount of institutional selling. And this actually came out before the dollar sell-off that happened today. So very interesting data to get. But again, the COT week-to-week money flow chart here that we have on the screen can be very useful for spotting big money moves. And we absolutely got a big money move because the dollar got sold hard, and we're now seeing that flow lower as we speak. Now, meaningfully, we talked about gold, so we got to also check on the other side. Well, gold got a nice little bid. We got 1.69% bullish move. You can, of course, pause the video if you want to go through all the different contracts. These are tracking the commitment of traders data, which we have built a tool here to help us visualize it and make it a little bit easier to understand. While we're on the page, we can also discuss some of the other bigger winners and losers. The NASDAQ saw a nice increase. The Canadian dollar, you have the Japanese yen even getting up there, which is really worth interesting looking into. Perhaps that dollar yen could go lower off of that. The Dow Jones, the Nikkei, silver, and then on the flip side, you have bonds getting sold further. This continues to encourage the 10-year yield I'm sorry, yeah, to go lower, which is actually interesting to talk about. The euro, you have the SPX being sold, which is a little bit alarming, but perhaps the indices have run a little bit of their course and are due for a bit of a pullback. I'm kind of in that camp. As you guys know, I'm no longer in my S&P trade. But it does seem like so far the Santa Claus rally is doing okay. We talked about that earlier, how during this period of time there is historically a pretty positive area for stock performance, and we're seeing that so far. The stock market is topped out just at its resistance here. Can't quite make it into the 4,800 at the time of recording this video, but we'll be watching for breakouts, pullback opportunities. Absolutely will be, in my personal opinion, buying opportunities, which sounds a little bit crazy because this market has moved so much. But again, momentum into the new year can continue to be strong. We've seen that in the seasonality quite a bit. I did also go long oil. We'll talk a little bit about my oil trade. I am long oil, not starting out super hot. You can see I'm down $111 as we speak, but I did share this signal inside of our VIP group. And if you would like access to the VIP group, you can get access to all of our signals being shared, both mine, Frank's, and Ivan's. We share our trades in detail inside of the Discord channel with all of our breakdowns. So I pointed out that global economic outlook lifted by the idea of falling interest rates. We started out the headliner to this video, basically the idea that yields are falling, that's causing the dollar to drop, and commodities could do well in that environment, especially if the economy hangs in there. If we see the economy actually sort of bottom out and even stay strong into the new year, oil will likely do very, very well, which of course is often considered black gold or liquid gold, right? Of course it is. We all use oil tremendously in our world still. Anyways, I am long oil for the foreseeable future. That is also backed by an Edgefinder top setup alert. It's not quite in the bullish camp, or at least when I was looking at it, but it is quite close to it. Plus 4 score on oil. That is giving us a neutral reading, but very close to that bullish reading of 5 or greater. And what we can see here is that COT looks pretty good for oil. Retail sentiment's kind of going against us. Seems like retail is kind of on the long side, which we don't love to see. But overall, we get enough economic indicators here as well that confirm the idea of oil bullishness. As I mentioned, I think, if the economy stays in there, hangs in there pretty well, we could see a nice push to the upside in the new year. It's also a very oversold market, in my personal opinion. You take a look at the weekly chart. Oil has been really beaten down and could be due for a bit more of a push to the upside. We'll see if I'm correct about that. And if I'm wrong, again, I will stop out and take a loss on this trade. And if I'm right, I'll look to trail stops. Any updates, like I said, that I take or share will be updated within the VIP group under the commodities trade section. This is where I share my gold and oil signals. So if you want access to that, here's how you can get access. Down below in the description, you can shoot us a DM on our website. If you click the very first link in the description, it'll connect you to someone on my team who can give you information about our pricing, our details, past performance, anything you'd like to see. Please feel free to shoot us a direct message using that first link down below in the description, or you can head over to our website, a1trading.com, and find our VIP Discord server. Up next, we'll talk a little bit more about the retail sentiment of this market, because I think it's a very interesting thing to keep an eye on. First of all, let's take a look at the major currency pairs. So in terms of our contrarian signals, we're seeing that dollar Swiss and dollar CAD retail is very, very long on these currency pairs. So I'm going to stay predominantly on the bearish side of those ones. On the flip side, we have Euro USD. Seems like retail traders are very short on Euro dollar, which gives me actually more confirmation to stay dollar bearish and Euro dollar bullish. So interesting concept here. The contrarian signals are confirming our ideas of being predominantly on the bearish side of the US dollar at this time. Let's have a look at the same time. We'll add commodities to the mix. So we can see that oil does not help out our bullish case, but with gold, we see a pretty mixed market, 46 to 54% in terms of retail positioning. Why do I bring this up? Well, if you know retail traders are piled into one side of the trade, it can actually be a signal. Now, this is no holy grail signal, but in confirmation with the rest of the Edgefinder's bullish and bearish readings, you can actually get a decent idea as to what the market is looking like, and that is the idea behind the software. If you want a copy of the software, again, same thing down below in the description. There will be information on how you can send us a direct message, or if you prefer, you can just head over to our website, a1trading.com. Okay, so up next, we'll talk a little bit about seasonality, because remember we talked about that big push that's going on gold right now, but I want to ask the question, is there room for this to continue into the new year? Here's a look at the weekly chart. We're back up just shy of the all-time high. Well, the previous all-time high, you can see, has been broken out once here recently, but let's have a closer look at this. So what we can see here is that several times we hit resistance, and then recently we very briefly wicked above the all-time highs, but it now seems like going into the new year, there's a solid chance that with this dollar weakness, yields are falling, and interest rates from the Fed funds rate expected to come down, I think there's more room for gold to the upside. So we'll watch to see if that does come true in the new year. But I think breakouts, retests, any sort of pullbacks in this level, I am actually a buyer, and we'll see if we can catch a good opportunity there on the gold market. But if I go down to the 4-hour chart here, I'm looking for pullbacks. I can't really do anything with price up here. There's no shorting this, there's no buying this. I'm waiting for a pullback. Perhaps the next one to look for would be a pullback to this 2060 level. If we get it, we very well may not, and I'll have to reevaluate. But for now, the question is there seasonality to back this? And I think that this is really interesting. Have a look here on the Edge Finder with me on the seasonality chart. And what we can see here is that with seasonality, we are going into, currently we're obviously in December with a few days to go before we go into the New Year's. By the way, Happy New Year's to all my friends and people who watch my videos. I appreciate you. But I do want to say that January here, here's a notable thing, 2.64% in the last 10 years. That's the average performance of gold as we go into a new year. So have a look at this and keep this in mind. Another thing that I want to point out to you guys, if we take a look at the 10-year average performance of the VIX. Now, if you don't know the VIX, let's talk about the VIX really quick. The VIX is, of course, the volatility of the S&P 500. And right now you can see it plummeting here as we enter into a really quiet period of the year. But the VIX spiking, what that usually tells you is that market participants are fearful and unsure about markets. Recently, we've had a massive rally in the stock market, and risk sentiment has really improved. That's why the VIX is down. However, as we go into the new year, there very well may be a possibility that we kind of navigate towards the trend, which is a increased volatility during the first few months of the year. I think that this could be very interesting. We see an 8.78% average move on the VIX, which is incredibly interesting if you think about it, because you're like, okay, well, gold also moving up. Perhaps these two things are indicative that fear is the common trait between the VIX and gold. So perhaps there could be some increase in fear, whether that be, and again, I think right now, if you're looking at markets, there's not a lot to cling on to if you're a bear. I'm talking specifically like stock market bear, or if you're a dollar bull, those would be the bears in the room. Those would be the kind of the more cautious, pessimistic people in markets right now. They don't have a huge argument like they did several months ago. Several months ago, it was inflation is a huge problem. It's not going anywhere, and they're going to have to raise rates, and that dollar is going to fly high, going to crush gold, going to crush the other currencies, and stocks are going to do terribly because those interest rates are going to remain high and cut into their bottom line big time. Well, that case is off the table. Now we see the exact opposite to what the bears were clamoring for. Now what we see is, again, institutional money is coming back into the markets. We see rates falling. We see interest rates expected to come down in the new year. There's already a forecast for 3 cuts next year. So there's a good bit of optimism in the markets, and until something changes and comes along, but that coming along perhaps will happen in these months. So keep an eye on this, and perhaps we'll have to clip this to see if I'm right about that. But I do expect that there should be a pullback in markets across the board. They do not go up forever, right? So we've had right now 8 weeks, I believe. 1, 2, 3, 4, 5, 6, 7, 8. If we have another green week, that'll be 9 green weeks in a row. It is due, in my opinion, for a pullback, whether that be brief or bigger. It's possible that we see markets go back to retest, for example, this 4,600 support level, but keep a close eye on that. And I think if you're a gold bull, we probably could see breakouts, retests, but I like that seasonality that's on our side, both from the VIX and from the gold market. So I will keep you guys up to date if I do take any trades. Remember, you can get the notification sent directly to your phone if you join our signals group, or if you would like to get access to this data for yourself, the link will be down below in the description. Thank you for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.